Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about 3 things to consider from a tax standpoint whenever you go into retirement. I've got Andrew McMillan here with me today. Andrew, what are 3 things that our retirees should be thinking about from a tax standpoint?
So the first one I would say would be understand how much Social Security benefits you're going to be entitled to, how much you're getting a year, and then what are your other sources of income, because depending on what other sources of income you have, like earned income we call it, it can make your Social Security benefits taxable. There's definitely a taxability piece in almost most cases to Social Security benefits, so you want to make sure you understand that. And how that applies to your situation. So understand how much Social Security benefits you're getting and then how much other earned income you have in your tax return. Second, the other one would be understand your required minimum distribution age and when that starts. Like, you don't want to miss that because then you may be subject to some penalties. So for most people right now, it's around 73. Once you turn 73, you've hit that required minimum distribution age. So you're going to have some rules. There's some specific time periods of when you need to start pulling money out once you hit 73.
And it's also really important because there's a lot of tax planning that can be done surrounding RMDs as far as because, once you hit 73, you got to start taking a certain percentage out. And sometimes does it make sense to start converting some of that stuff to a Roth early on and try to get it out of those retirement accounts.
Right.
Yeah.
Right. And then lastly, we see this a lot where people have IRAs. So if you have IRAs, just understand the kind of IRAs that you have. There's a difference. So some of them are traditional IRAs, and then other IRAs are considered Roth IRAs. We see those a lot. So traditional IRAs are taxed when you pull that money out. Roth IRAs typically are not going to be taxed when you pull that money out. So if we were to add a 4th one here, it would create a plan. So take these 3 takeaways here and then create a plan around this. Because if you have different sources of income coming to you throughout retirement between Social Security, other earned income, IRAs, required minimum distributions, you have some levers to pull. You have some options to choose from, and you need to create a plan around pulling that money out in a tax efficient way.
Really good information, Andrew. So if you are preparing to retire and you want to understand the tax implications of all the income that you'll have in retirement, feel free to give us a call and we'll help you out. Thanks.